All right, guys, good morning. It is 10 a.m., 10 a.m. Sorry, I'm a bit late. It's Friday, September 20th, 2024. We just had the interest rate Fed reduction in about a year and a half, 50 basis points, pretty aggressive. The market is still trying to figure out if that is good news or bad news. Good news in the sense that the Fed saw the soft landing was in sight, and that's what they're going after, or the bad news that the economy is in such bad shape that they had to go with the aggressive 50 basis points. So the market is still figuring that out. Yesterday we had a huge green day. Today we have, I believe, a red day. Portfolios performing very well due to the Intuit calls that I had sold. I've rolled a few of them, but a few of them are actually expiring today. We'll review those. What I want to do today, guys, is really go do three things, right? The first thing I want to do is do a little portfolio review, see what's expiring, see what we're rolling, kind of do that together. The second thing I want to do is, I know we talk about the Poor Man Covers Call campaign a lot on this channel. I know if you guys follow TJ, the real deal, he also has it a lot. And truthfully with that, when you buy the long dated leap and you're selling short term or short dated calls against it, eventually you're going to reach the end of the rope. And the question is, well, what do you do? If you're lucky enough where the previous week or before the long call expired, your call expires, which basically means it frees up your long call, then you should most definitely explore selling it and getting rid of it before it expires. But if you don't, and you're in the position where, if you look at my AMZU, which is a leveraged Amazon call, you can see that I'm in the scenario where I've ran out of time, right? They both expired today, so I can't roll the call out. And it's a $30 call that expires today with a short dated or equally dated call for 33. So I can't necessarily sell the call unless I buy this back, which I'm not going to do. AMZU is at 33.95, so I'm in the money. So I always wonder, well, when they both expire, if I was just to leave them as is and I didn't close them prior, and I'm actually clarifying with Robinhood to see if they will close it for me prior to market close, which would kind of suck. But I'm trying to really understand what happens. Right now, we're in the process of getting connected to support. I personally don't know. If you guys know what happens and you've been through this instance before, feel free to put it in the comments. Ideally, what should happen is that, you know, technically you bought the shares, or technically you control 100 shares at 30, and then technically you're selling them at 33. So technically what should happen is you should just be credited $300 at the end of this and call it a day. That's really what should happen. And truth be told, you know, options are very efficient. These things might already be priced to where if I sell the call and if I buy back the call and then sell the long dated call, it should equal out to the same, right? So this one is worth $390, and the other one I would have to buy back for $123, so $267. So $267 minus the $300, there's about $33 worth of extrinsic value, of implied volatility. So that's pretty much what we're playing with, right? The idea that AMZU closes under 33. So we're going to let support clarify that. That's one of the main things I want to talk about. I want to talk about Intuit too. I think Intuit's been a pretty interesting roller coaster. Look, honestly, at this point, I'm going to close a lot of these calls because Intuit's been very, very volatile, extremely volatile, to the point where, you know, if you look at the week, you know, we've had highs of 650, lows of 630, back to highs of 660s. So if I get the chance, you see, I have a few. So the play here is I really have 10 calls. 6 of them expire in December 20th, and 4 of them expire in about a month. On those long dated calls, I'm selling just a bunch of calls on them. I've had to roll a few of these out, which is making phenomenal gains for me. You see these 10-4s, for example, I may just let those ride. These I don't have to worry about, 627. And the most important thing you guys have to remember if you decide to replicate this strategy is you have to be careful that your call doesn't get called away, your long dated one. Because remember, you're buying time really with this. You're buying, these calls have two portions. And for those that are new, I'm just going to quickly explain it. Extrinsic, intrinsic. Pretty much intrinsic, the way I like to remember, is the value inside of the shares, right? So you're controlling $690. you're controlling 100 shares at 690. And then you have the extrinsic value, which is outside of the shares, which is time, right? So time, you're buying time. So a lot of these long dated calls, it's intrinsic value, which is the 690, which is 69,000. Oh, well, probably didn't do that right. 690. All right. And so I'm basically selling calls against them and trying not to get caught, because you're responsible for the difference between when you're selling these calls and the long dated call. The idea is for you to eventually get above 690. That is best case scenario. Because if somebody says, hey, you know what, today this 650 expires, I'm actually going to reclaim it. Because remember, if you sold this call, that means somebody bought it. So they're like, you know what, I feel comfortable buying 100 shares at 650. I'm going to go ahead and do that. Then these are paired with one of these long calls. I don't know which one. Robinhood does that internally, but it's paired to one of these two. So that means that one of these calls is going to be called away, and you just paid a lot more for those 100 shares and 0 time to monetize it by selling calls. So anyways, that's my little rant there on kind of the poor man cover call campaign. So having said that, this 650, for 75, I'm very inclined to close this off. And what I'll probably do is, I have 2 expiring today. I'm not worried about, this one I'm actually probably more worried about. 158, 86%. You know what? I'm probably just going to close all of these off. Let's see if we can get released at 130. See, when it happens so quick, I can't help but feel like I left money on the table. You kind of want it to kind of wait a little bit, to be quite frank. 652. Am I really going to risk it for 23%, 22%? Seems like it's coming back down. Well, let's see. When was the last trade? So the last trade was at 50. So if I can get 60, I would do it at 60. Wow, it filled at 60. You guys saw that? This thing was like 120, 130, and I got to fill that 60. You got to be careful with these things, man. You guys really have to be aggressive when you're closing out calls that don't have a lot of volume. Okay, and now let's go to, what else do we have expiring today? 650. 80 out of 200. Out of 300, I would leave 80. But it's not really 80, because the last trade was 364. Look at the bid difference. So buy to close, I'll probably do, like, honestly, like 20 bucks. Let's see if this closes on 20 bucks. Can't. Look at that, 25. All right, I'll do, honestly, I'll probably do up to like 45. Came up to 45 right here. You can see how this moves here. Nothing's really traded under 364, which is kind of crazy. Let's do 75. If this thing starts going back up, I'd rather just take my gains and move. 75 and 100. So we're actually getting closer. Maybe if I do 80, I'll be able to lock in this win here. Just bear with me, guys, while we kind of go through this. This should fill. That should definitely fill. Where are we at? We're 650. Let's see what we're looking at here. So Intuit doesn't really know what to do. It's been pretty aggressive. That's really the main reason why I decided to sell, because it's been really aggressive lately. I mean, look at this hike here, right? This is right after earnings. It dropped. It seems like it's coming back. I'm not too convinced on this kind of, look at this go. It hasn't really broken any kind of, I would consider this a line of resistance, perhaps 646, 640. It's at 643, 644. Yeah, honestly, it's trending in the right direction. I'm not concerned. This should go down, but it's very related to SPY. Like if we go to, if we look at this chart, right? Now let's just, out of curiosity, let's just go to SPY and see what's going on with SPY. So that's the week chart. When it went up, this, because it was Fed, that was the Fed, so it was a lot of the market rose. S&P is nice little rebound here, but let's see if it keeps it. That may push these up a little bit. Okay. Anyways, let's go to our support chat. Nobody's on here. All right, so let's go back to the call that expires today. And you know what I may do, to be quite frank, is I believe I only have one call expiring today left. Oh shit, did it fill? I think we did fill it. Yeah. $80, not bad. Portfolio today's up 1%. We're really printing those into it calls. Let me see if I have any short dated ones here or any low strikes that I want to release or buy back. Now would be the time to do it. So I've got 3, 4, 5, 6, 7. So I've got 3 options that I need to resell, and I'll probably hold on to them until this thing turns green again. These 2 are probably the tightest ones, especially October. What are we up? 680 on these already. I'm going to decide later, seeing how, you see it's already coming back. I have 2 here. So I may just buy one back. Well, you know what? Let's just let it ride. 645. 2 weeks. Let's just let it ride. See, I mean, worst case scenario, we roll it out. All right, CleanSpark. Let's continue doing the portfolio review. So CleanSpark is red at $9. Hasn't really done much, to be quite frank. Everybody knows the story on this CleanSpark. I got caught with $17 a share, okay, selling puts. Luckily, the premiums, everything I'd done before, saved me in the sense that my break even is about 13, 14. I bought another 100 shares when it was at 8 to kind of average down. So this is pretty much where we're at. We've got 3 calls expiring today, $10 calls, 2 $9.50 calls. So I think both of these are safe. Both of these are going to expire. Worthless. I don't think CleanSpark's going to rally 50 cents today. Let's see what else we have here. We already spoke about Intuit. We're talking about Palantir. So I'm not sure what I'm going to do with Palantir, but pretty much I have a $28 call expiring on the 27th. So one thing I'm going to do here is I'm just going to sell a $28 put. I may even do 2 weeks. It's probably really low premium. It's probably nothing, bro. Look at that. 4 cents, $4. It's not even worthwhile. $8 for it. I mean, $2. Yeah, Palantir, I'm just probably going to let it roll, continue rolling it out. I got till next, these are all next week expirations. We've got a Tesla 205, not concerned about it. Obviously, that's underwater by a lot. More Intuits, more Tesla, SoFi. SoFi, I've pretty much forgotten about because I pretty much capped my upside. I was trying to aggressively get out of it, and lo and behold, I did. It rallied. Should have held on to a few shares, but they're all tied up till 2025. It is what it is. 5 and 5. I think I have 900 shares. Yeah, which really bothers me. I should have gotten 1,000. You know, if it goes under 750, I'll probably buy another 100 shares. But that's pretty much it, guys. I don't want to keep talking about the open positions. So we got open positions. We talked about the Fed in the beginning. We talked about Intuit. If you guys have any questions, feel free to just ask in the chats. I'm monitoring both social medias, both X and YouTube. Now, if we are done for that part, I believe we're at 16 minutes. So, you know, I like to keep these under 30. So we got time. What I want to do is throughout my trading, I've been trading for, I think, close to 10 years. I'm actually 30 years old. I started understanding the markets back in my first year of college. I interned with Morgan Stanley 2 years in a row. I got a finance degree. So my trading, I remember Tesla when it was at $90 before any sort of split. Back in 2012 when they were first starting off. But anyways, long story short, I created in that whole 10 years, I've created a set of rules, sort of like the 10, they're not 10, but the commandments of trading. And I've refined them with examples over time. So what I want to do is every time I go live, I'm going to take one of those rules. We're going to put it up and we're going to go ahead and discuss it. And I'm going to tell you guys what I learned from it, what you can take away from it, what you can choose to ignore. Take the ones that are useful for you and just forget about the ones that aren't, you know. So let me go ahead and pull them up. Some of them may be redundant. Again, I really just wrote this for myself. So if something sounds dumb, or we can discuss it together. All right. So let's start with the first one. Trading rules. Keep position sizing. Here, we're going to do a little document here that we're going to keep adding the rules to. And then what I'll do is I'll post it for people to download. The trading commandments. Number 1. Is that how you spell commandments? Keep position sizing to 2 to 5K on credit spreads and other risky trades. So I learned this rule when I was doing, I've gotten caught on 2 bad credit spreads. And a credit spread is pretty much when we'll actually make one together. Let's go to, let's go to Intuit. We'll do one up to Intuit. Pretty much it doesn't require a lot of capital because it's kind of like a poor man covers call, but for a credit. So for example, I'll go into here and this will be expiring, let's do tomorrow, next week. So I buy, let's go to October. So that way it doesn't show any of the ones I have. So that way, let's say I want to position myself. I want to sell a call. Let's say I want to sell a call, right, at 680 because I don't think Intuit's going to go past 680. But obviously I don't have the shares. So what do? I buy a call, right? I buy a call that basically steps in for those shares that I don't have. So if it does continue to go, I have some sort of collateral. That's really what it is. It's for collateral. Now, there's 2 ways to do a spread. You can either do a debit spread or a credit spread. A debit spread is a lot safer because basically what you're saying is you're buying the call at 680 and then you're selling a call right above it, right? So technically from 680, you own those shares, or you're responsible for those shares if it goes above 280, 680, but you're giving them away at 700, right? So that means that your risk at expiration is if it lands somewhere in the middle, right? So even 680 wouldn't be a profit. It would have to be above 682.43. So right now we have, what is this, October 11th. So basically you're paying for a call. You're paying 430. You're receiving from the call that you're selling. And so my cost, right, this is a debit. Your cost is going to be 360. This is like the poor man covers call. This is safe because you are above the long dated call or the call that you bought. That's your collateral. That's what's protecting you from having to buy them at, if you were just to sell a call at 700 and it goes to 800, the time of expiration, you owe this guy 100 shares. So you have to buy them now at 800. So that's why buying this call is what helps. So anyways, this is a call debit spread. But if you were to do it the other way around, where you put the call that you sold in front of the long dated call, right? So it's kind of it's a credit debit spread. The risk is in this area right here, in this gray area. So if it goes above 680, which means that, hey, you owe this guy to buy his shares at 660, but you don't own any shares, and your contract to buy the shares is at 680. So this gray area here, right, is what's the collateral that Robinhood's going to require, could be completely gone, right? But then you're going to have to close this before expiration, because at expiration, it's not that you can claim these at 680, it's that this expires worthless. So if you let it expire and you're under the 680, this is gonna lose a lot of value. Point being that if you're gonna do risky trades, make sure that it's a small percentage of your portfolio, a very small percentage, because a lot of these trades can go bad, especially credit spreads. I personally stay away from credit spreads unless it's something that is, very long dated and very out of the money, and in a stock where, long story short, if you need to disassemble that credit spread by, let's say you exercise the long call and you actually buy the shares, and then you're able to roll out the call, right? If you have the money or the collateral to do that, then it's a lot safer. But anyways, that is today's first rule. Keep position sizing to 2 to 5K on credit spreads and other risky trades. It obviously depends on the size of your portfolio. I think what is reasonable to assume here is anywhere between 5 to 10%, and that's even on the high end. The point of, and this is again the rules that I use myself. I like to grow my portfolio slow, and I like to grow it surely, and I like to, I don't like to be sweating at night. I don't like to go to sleep thinking, damn, I wonder if the market's going to be right. I really don't like that. I want to be able to leave this and go home, or I am home, but you know what I mean. I just forget about it, and all right, let's see, Robinhood, hang tight. All right, so they just don't have anybody working. And Evan is reviewing your case. Oh, okay, so let's what are we on? 23 minutes, so we got some time. Let's wait to see what Evan says. This is again in reference to the Amazon call, right? This would have been a debit spread, but the play here that I had was I bought this a while ago, this $30 call. And I was just selling calls against it, right? So you can see here, I bought it for $590. It's worth $385. So I took a $205 loss, but I brought in through the calls. So we'll have to see what the end result is. This was really what this play wasn't to get rich. It's just really to see what the percent returns look like on a trade and kind of get familiar with it. This gave me a little bit more confidence to open up into it, which I have. It's about a $10,000 exposure. What I do like to do is I like to give myself little reminders here if it goes above a certain price, so that way I know to check the position and see what I'm going to do. So 650 was the height of the day, so obviously if it goes above 650, I think it's something to keep an eye out. And then also it seems like it has some resistance at 643.21, 643.21, 643. So I'm going to put below 643. If it goes below 643, then, we got to basically take a look at it. And then I'm going to put 640 here just in case it keeps going. I get a double notification. So now that way I can pretty much forget about it. Now, what is this guy saying? He says, hey, Hugo, thanks for reaching out. I'm Evan. I see you're interested in option trading. Let me look into this for you. Yes, in the last hour of the day, the risk check process may take effect. As your position opens near expiration, a few things can happen depending on whether the option is in or out of the money. If your option is in the money and you have the buying power to exercise a call, or the shares required to exercise a put will attempt to exercise the contract at expiration. You don't have the buying power or shares to cover. We may place an order to sell your position during a risk check within the last 30 minutes before the market. Please note that the risk check may occur earlier during periods of high volatility. If your option is out of the money, Robinhood may still attempt to close it. So basically what they're saying is, I don't have buying power, and I don't. I'm building up my cash position. I had to buy a few calls back. I've really deleveraged a lot. I'm not using a lot of margin. So basically what he's saying is I don't have the money to exercise it, and they're going to try to close it themselves. So what I'm probably going to do is I'm going to wait. Look at the value on this call. I'm going to try to close this. I'm going to wait till probably 11 or 12, but I'll probably close this out. I think it may be a close break even, or it may be a break even. But anyways, we'll figure that out. This is full transparency. My portfolio to date, we're at 45%, close to $67,000. And we continue. All right, guys. Well, look, that's it. It's 27 minutes in. We'll continue the trading rules next time. Any questions that I can help answer, I am checking now if I haven't answered something already. I don't see anything. So thank you guys for watching. Thank you those that stepped in. Please like, subscribe, share it. Huge help. The whole point of this channel is transparency. I think it's the most important thing. It's like riding a bike. You got to do it with a community, and you got to do it with people that have been through it before. And that's probably the best part of this community. So thank you guys for watching. Have a great Friday and enjoy your weekend.